Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on sunpharma. Sunpharma reported a 9% YOY increase and a 5% rise from the previous quarter, exceeding our estimate by 2% despite price cut in Taro's portfolio and Japan. EBITDA showcased a strong 24% year-on-year growth and a 9% sequential increase, surpassing our forecast by 12%. Margins stood at an impressive 30%, up by 356 basis points YOY, largely due to the specialty portfolio performance. The profit after tax was 3,031 crores, making a 26% YOY increase. Looking ahead, we expect Sun's India's business to continue outperform through volume growth and new product launches, so we maintain a buy recommendation. The stock is currently trading at 38 times its FY26 earnings and 33 times its FY27 estimates, with a price target of Rs 2,264. Next we cover ICICI Bank. Our analyst maintains buy rating on ICICI Bank with a price target of Rs 1,500. ICICI Bank reported yet another steady quarter with stable return ratios amidst sectoral headwinds. The bank is relatively well positioned as it continues to outperform peers on most of the parameters, exhibiting strong franchise strength, and thus current valuation premiums to peers is likely to sustain. We believe bank is likely to sustain ROI over 2% in near to medium term. The stock has outperformed the broader indices in last 1 year, and it currently trades at 2.7 times its FY25 and 2.3 times its FY26 core book value estimates.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.